What is going on, everybody? Paul here, coming at you with a Crypto Coffee update on which, believe it or not, we allow for comments. That is because we here at Cryptide are genuinely focused on the objective pursuit of truth. That's why we put all the sources below in the description, so you as individuals can see where this information is coming from and be able to use your own sources and information to either corroborate or correct this information that we put out, as we all try to work towards a more objective view of the truth. So thank you all who do that. Seriously, individuals who share that information and help us corroborate, you are invaluable. Truly, you are fantastic, and you are what makes the crypto space the best it could possibly be. And for that, simultaneous sip to you. That's some good stuff, guys. All right, so let's jump into what we have for the day. Crypto Panic on your screen. Why is that? Because that's where I got most of the articles, not all of them, but I like to give credit where credit is due, and I very much enjoy Crypto Panic as a website and a service. So, with that said, it is a centralized service, much like Initiative Q. Now, we're going to get into this. This is something I've seen everywhere. I mean, even in non-crypto related communities I'm a part of, I'm seeing people sharing this invite link, and I had to look into it, and needless to say, looking under the hood, I was shocked and disgusted at what I found, but it's not too particularly surprising. After all, the only thing it costs you to get these tokens is your name and your email address. Now, if you're saying, oh, Paul, where do I sign up? Hold on, let's talk about this and think, if they want to give you something for free, what's the value proposition for them? That's the big question. It's where critical thought comes in, and we're going to examine this nice article by Layla London, probably not a real name. She is extremely bullish on Initiative Q, as are the almost 300,000 people, assumingly, who have seen this article. Let's go ahead and dive in. Initial Q is not a cryptocurrency. They're completely forthright about that. It's from some ex-PayPal executives who said, why don't we create a better payment system? We'll put it in a centralized server, owned by us, of course, and issue some coins. It'll be like Bitcoin, right? Completely different. Bitcoin is a distributed ledger, as many of you may know. It requires nodes to work on a proof-of-work system to verify what transactions are legitimate and reach what's known as consensus. In this way, this distributed system is open for anybody to participate at certain cost, and that's so that they have skin in the game. Essentially, what this allows for is a resilient, robust ledger in which all participants are assured of the correctness of the data that has been attested to the chain. Initiative Q is basically like your computer you have sitting right here. It's a centralized server. You can put data on it, you can take it off at will. No big deal. That's where we have kind of a problem. If Initiative Q is supposed to be a payment mechanism, a medium of exchange, having a centralized server to control it just means that those who control it can create an infinite amount. And that way, it can become stable, much like Tether, right? They can print and take out of circulation so it can remain stable. But that also means that the idea of it mooning or becoming worth more money is increasingly difficult since you have this centralized vector of control. Now, as said, you have to input your name and your email address. Well, what about a fake name and a fake email address? Gotcha there, Paul. Well, guess what? Random hypothetical individual who I'm using as a straw man. Essentially, what you're doing is you are making yourself the product. And what I mean by that is even if you use a fake name and a fake email address, if an individual who you give to your referral link, another vector of incentive. You share your referral link, you get more tokens. Yay. Well, what if they put in the real email address and a fake name, let's say? Well, that real email address, maybe that's corroborated. Now you can transpose this information and associate it with other individual identities. Oh, maybe Joe Schmo, whatever his name is. Maybe that's actually Don. We know that because his friend Sam put in his information. So we could reasonably discern, to a degree, who is who as we intake more data. So now you're beginning to see the real value proposition is assumingly the social network mapping that is occurring over at Initiative Q. That's where the real money lies. So if your information is valued at the price of random centralized token that can be completely manipulatable and realistically will likely never achieve any semblance of value, that's completely fine. I just want you guys to be informed about what's going on out there in the space. It's like no skin in the game, right? That's no big deal. I'll just put my information in. This guy wants your info, and frankly, he's going to sell it to make money. That's how the world works. That's just how life is, and unfortunately, it's you can now use a vector of financial incentive. They even use this slimy little thing. Oh, look, $44,000. That's how much money you can have if you just sign up. Come on, guys, free money. And I'm not going to click the actual initial Q. I want to call it initial Q, like initial D, the deja vu meme. But yeah, Initiative Q. I keep wanting to call it that, but I'm not going to click the link. I'm not going to get whatever they may have on their website onto my computer. So suffice to say, this is an excerpt from there. If you missed getting Bitcoin 7 years ago, you wouldn't want to miss this. Apples to orange comparison, no skin in the game. Frankly, they are psychologically gaming users to get their information. Really, that's all I have to say on the subject. You guys can make your own decisions. Always do your own research. Let's go ahead and move on from there. Did I ruin my life? I really hope not. Poor guy. Student lost $800,000 after trading cryptocurrencies. Now faces $400,000 tax burden. Even worse, since the gains occurred in 2017 and most of the losses occurred in 2018, this guy doesn't look like he can write off the losses on his taxes, and that sucks. This is something I wanted to bring up to highlight some of the difficulties faced by individuals who are investing and trading in the U.S. and how that's largely being changed slowly over time. Individual still did really well with himself. He started with $5,000 and ended up with $125,000. So good job, young man. And I think we could all agree that these kind of difficult situations that arise from opaque regulations that largely exist for traditional financial institutions and mechanisms, they largely don't have applicability in situations like this. And just from a on-the-ground perspective, young dude, 19, $5,000, cranks that up to $800K, and then it drops to $125,000. Young man still did well for himself financially, and he's being really severely punished for it. That is not a way to encourage and incentivize free enterprise, and I think the U.S. knows that, and they're trying to change it. See, here some new guidelines from the SEC are coming for ICOs very soon, which is good. I just wanted to bring this up as well because it mentions FinHub. FinHub is a subsidiary, I guess a division, you could say, maybe, I don't know what the technical terminology would be, of the SEC, and they are working on clarifying these regulations, distilling them down, and making them applicable for the new asset class, as Morgan Stanley called it, of crypto. So that's pretty cool. You can see here the larger article. They announced the FinHub division back on October 19th, going to act as a central medium for the securities agencies to interact with developers and entrepreneurs from the fintech space. So just like they put out the ETF a while back and opened it up for comments, this seems to be a more flexible notion of the same idea. The SEC able to interact with the on-the-ground consumer and individual to get the best discernment as to what is actually happening in the space and what rules and regulations may be most applicable for the budding fintech environment. So that's pretty cool. Next up, Zafe. Remember, they got hacked over in Japan. Well, it turns out that the Japanese authorities over at the FSA, Japan's Financial Services Administration, I think it is, but yeah, suffice to say, they are on the case, and they believe they may have tracked this guy down. How they did that is they ended up tracking the trades that were subsequently had after the coins were stolen, because after all, if you steal something, then assumingly you're going to want to liquidate it so you can enjoy the fruits of your theft. So Japan's financial services agency has been keeping a close eye on that, and from the looks of things, they are closing in on the alleged hacker. Just wanted to bring this up because we mentioned that we would keep you up to date on any subsequent developments. That's where we stand now with Zafe, and we'll continue to keep an eye on the just ever dramatic saga here in crypto with centralized exchanges. I'm telling you, there seems to be a hack at least every other month or so. Seems to be high-profile hack, crazy stuff happening. But yeah, less intense, but definitely equally or more so worrisome. Apple has removed a crypto podcast that was reportedly ranked number 4 in investing from the U.S. iTunes Store without reason. This was the podcast Off the Chain by Pompliano. Pompliano? Yeah, I love that name. Pompliano. Very enjoyable to say. Very Italian. Pompliano's podcast Off the Chain was taken off of Apple iTunes with no warning. Here's a quote. Last week, we released a podcast discussing the ultimate argument for Bitcoin. It exploded and ranked number 4 in U.S. investing category before mysteriously being taken down by Apple. We had no warning. We don't know why. They took down our podcast, but they can't take down Bitcoin. That is a very positive silver lining take on the situation, really. I mean, it's pretty much of a pretty big bummer whenever you have your stuff needlessly censored or taken down. We have been kicked off of YouTube a few times. We here at Cryptide, so we know those feelings well. I certainly know that feeling, and everybody here at Cryptide knows it as well. So, thoughts are going out to them. Hope they can get relisted soon. But it's suffice to say, this is more of something I wanted to bring up to highlight the fact that, again, centralized systems maintain absolute dictatorial control of the data that is hosted on their servers. So they can do things like this with relative impunity unless regulators step in. So this goes back to Initiative Q in a certain way. So keep in mind centralized systems. And last article of the day we got. Exchanges continue to manipulate low market cap coins. This is something we've known from Sylvian Ribe's articles talking about the fake volume that is rampant in crypto. And this is something that's becoming more evident and something that's becoming more nuanced as well, which is really cool. Basically, that they found that the exchanges are using The exchanges are using some coins that are taken, not really taken, but given willingly from ICO projects to manipulate the supply in exchange for the ICO projects getting listed, therefore giving them access to wider market, basically wider market view, I guess you could say, for lack of a better term. More people see it, more people want to invest. Actual investors do invest to some degree, but because the amount of tokens that were given to the centralized exchange, it leads to a lot of manipulation going on. That makes it a less attractive investment. So it's kind of a catch-22 in a way. But with that said, it's definitely something that's going on. Over 80% API trading, meaning it's largely just bots trading with themselves. Some of these have even 80 to 90% from referral traffic from CoinMarketCap alone, meaning that a lot of this volume just isn't real, guys, and that's a big problem. And it's still being addressed. There are inconsistencies in financial data, as you can see here, but we'll put this article below in the description along with everything else we've seen here so far, so you can do your own research and keep up to date on the space. Excuse me, for the time being, let's go ahead and get into the happenings for November 7th, Wednesday. We have the Blockchain Life 2018 conference kicking off in Russia. For November 8th, Thursday, we have Quant World Canada 2018 happening in Toronto, and the World Blockchain Forum happening in New York. That's all we have for Thursday, November 8th, and for this Crypto Coffee update. As I just mentioned, links below in the description. Got to do your own research there. And thanks so much for watching. Seriously, here's to y'all who do the research, share the information, and help to corroborate the sources. Because after all, that is how we get closer to the truth, guys. So with that said, my name is Paul, signing off. Thanks again for watching. We are Cryptide, and remember, the tide is rising.